So I'm starting to believe something that probably is controversial. So whenever I have these crazy, wild ideas, I want to share them with others that I know, trust, and respect, and frankly, are smarter than me. And to do that, we're going to talk to the three amigos. Dion, how you doing?
I'm glad Matt's here so that there is somebody smarter than you and me in the room.
It's not
It's
gonna
fun.
I'm
It's
doing
funny you
great.
say that. Matt is clearly the smartest of the three of us, and you are the best teacher. So I'm just here with the guy with the most videos because that's all I can literally bring to the table.
no, that's not true. It's not true.
But Matt, how are you?
I'm doing great. Excited to be here as always. Tuesdays, I wouldn't spend them any other way.
There you go. So my controversial topic today, and I believe this almost with every fiber of my body. I believe 8% mortgage rates are a good thing. I believe there are very few things today that could cause the housing market to slow down enough that it could kind of naturally heal itself. I think 8% mortgage rates are great. I think 5% mortgage rates are horrible.
Agreed.
And I think most people think I'm crazy. Matt, what do you think of that?
I love it. I totally agree. I at 5%, I have to deal with all the dipshit pretenders, that walk through the place. They're just like, I see a spot there and that's going to need to be taken care of. And I see a spot over there and we should probably fix that. And it's like, oh, dear God. No, that's not how you walk a property. And so for me, 8%, that makes me still a buyer because it takes all the frauds out. It takes all the newbies out that haven't been educated. If you're educated and you know what you're doing, even if you're new, you can still win. If you're that newbie and you're just like, I saw real estate on TV once, I'm going to do that. And you watch HGTV on roll, like, then there you go. You're likely going to fail. But when you're educated and when you invest in yourself to get educated, you can still win in that market, which is 8%. But the thing I love most about 8% is, yes, it gets rid of the uneducated. But even better is it really gives you the opportunity in some of these bad assets to create value add. There is that opportunity where you walk it and you're just like, that number is insane. That number is like and you go back to people and you say, I'm not sure if you've done the math, but I'm upside down in this thing, and anybody will be at 8%. Well, that's their problem. They can bank on appreciation. I go, the bank doesn't bank on appreciation. So you're going to need someone to get a loan approved, jackass, unless you're doing some sort of private financing or seller financing. So I love 8% rates because it reduces the pool of people that are buying.
Yeah. Okay. So Dan, what do you think? 8% is great. 5% would be horrible for the housing market.
I think 8% would be great. 5%, I think it's 4.9. Even if it's 4.999, that's the magic number in my head where it goes crazy, right? People start buying anything and everything and it goes up again. And I think there's a missing metric. I think the 8% is great, but it should have came in December of 2021.
Yeah.
When we saw inflation going 6, 8, and not Jonathan Twombly, who was the other guy on your channel, but he said he called there's going to be a 9 handle on inflation, and everybody kind of laughed in the comments, and then it hit 9.1. We needed 8 then.
Yes.
Agreed.
This drifting down and hitting 6 and 5 and 4 when the goal is 2. People are thinking, somebody is thinking, oh, we're down to 4% inflation. That means things are going to cost less.
That's not how inflation works.
That's not how
They're only going to cost 4% more, not 6% more or 8% more. So I think it's great. I think it should have happened a long time ago. I'm with Matt. The high rates make us a buyer. I think I'm still hunting. I've been making offers left and right until I finally landed this one. When I pulled the offer on the one I ended up closing on, I was making an offer with a mortgage where I expected, I think at the time it was like 7.5 or 7 point something percent. And it was a good deal. And then this deal called back and asked if my offer was still available. And
they wanted to give you $100,000 off asking. So you took that one instead.
Yeah, 100,000 off asking. But the more important metric to me is 350 off of ARV.
Yeah.
Right. That's the one that in my mind goes, it's not a good deal because it's cheap. Right. It's a good deal because when the repairs are done, comparing that, the low purchase price with the cost of rehab to the ARV, it's Kiyosaki says it. You just you create money in this
Yes.
business.
Yes.
Yeah. Yeah. One more thing I want to talk about 8 and 5. I want to be very clear. I think we need to have 8% mortgage rates for a year.
Yes.
Because what I want the housing market to do is just slow down.
Yep.
And you know what the really crazy thing is? If you were to talk selfishly, what number would add more to our portfolio? An 8% mortgage rate or a 5% mortgage rate? Which one would help us individually more? Matt?
I would say a 5% interest rate would definitely add more for me.
Of course.
Yeah.
You're not, because again, right? You already have a set of assets.
Yeah. Pricing goes through the roof.
Yeah, we get another, I don't know, call it 10, 15, 20% pop over a couple of years.
Yep.
You have a portfolio of 10 million bucks. That's $2 million in equity for doing freaking nothing.
Yeah. Yeah.
Right. So Dion, even with 18 units, does 8% help you personally, or would 5% help you more?
Personally, almost all not all, a lot of the advice that we give isn't in our best interest.
Exactly.
Right. Every time we would make a crash video, the Crash Bros take away 2% of our competition. So we should be making crash videos.
Yeah,
right?
exactly.
Our YouTube channels would grow faster because fear porn sells better, and we'd be eliminating competition. So we're not giving advice that really helps us. I want the 8% because I think it's going to help the housing market. The 5% would create demand in properties to the point where, I mean, at some point the prices get stupid and you think, I should just sell everything, walk away with $10 million. And see if I can spend it, right? That's how much the appreciation would be. So 5% helps us. I don't know which one, 8 or 5, because I'm hunting for the next deal at the same pace. Warren Buffett says it. I like that. He says if he knew exactly what was going to happen with interest rates in 2 years, he would invest exactly the same. Nothing would change. I'm hunting for the next great deal.
We just do great deals. That's all we do. We're disciplined and focused. We are not the average person, clearly. But again, what I'm hoping for an 8%, and it's really weird. If you follow guys like I do on Twitter, Logan and Lance and Housing Wire and Fortune, new listings are down 25% from last year. Inventory today is below last year, which is wild to think about. I think 8% makes more of that because you see wish pricing disappear. But then what I really want 8% to do, this is what I want. I want 8% to separate the want to sell from the need to sell.
That's right.
That doesn't happen in a day, a week, or a month.
Correct.
Right? For example, one of the properties I shop for in Las Vegas, the couple bought it for 1.2. They dropped $500,000 into the backyard and air conditioned 7-car garage and just all of this crazy stuff. So they're in the property 1.7. They listed it for 1.5 because they wanted to get their money back. I don't think it was worth more than 1.2. So I offered $1 million cash because again, they don't live there. They have a mortgage payment going out. So I offered $1 million cash saying, hey, if you're really desperate and you want to stop the bleeding, take this. I didn't think they would. But my first offer is never the one I expect to be accepted. It's the one I expect to follow up to.
Yep.
And I said 1.2 will get the deal done, of which they said, no, you don't understand. Did you see the garage? I don't give a fuck about the garage. I got 2 cars. Why do I need a 7-car garage? And why does it have to be air conditioned? I'm not that spoiled. And so that was probably 3 weeks ago. They've already called our agent back and said, is the guy still shopping?
At $1 million?
No, $1.2 million. They were interested in.
Okay.
Yeah. But still.
Yeah.
This is what I want, is somebody who has a house that they are fond of and they invested all this sweat equity in and they want to recoup their money from. That's not how housing is sold. It's how it's sold at 5%.
Yes.
It's not how it will be sold at 8%.
Correct.
Right? So I want time at 8% so that people that are like us and people in our community can write disrespectful offers. I will tell you, $1 million offer on that house was disrespectful.
Yep.
And I don't care.
Nope.
So we need this for the rest. I hope the rest of the year is 8%.
Yeah.
If we go back to 6 and heaven forbid 5 or 4.99, Dion's right. There will be a point, like I talked about in my first book, One Rental at a Time, where I will sell everything. It's like, screw it. Too bubblicious. I'll punch out with 20 million bucks and wait. There's some number. And if we go to 499, we might be on that way. I don't know. Matt?
Yeah, I mean, in my market, I'm, you know, 2s, 3s, and 4s is my specialty, and everyone that's selling is breaking the previous record. It's kind of, I mean, but here's the crazy thing, that's still giving. I was able to find out after speaking to probably 50 people, I was able to finally put together a theory, which is about an hour away, they live for 5% cap rates. And here it's 8 to 9.
Okay. So they're doing Dion. They're expanding the footprint.
They are. They're just looking at it and going, I can do this deal here and I can get 5%, 5-ish, 5.5, or I can go there and I can get 8 or 8.5. And they're doing those deals. And so they're the ones pushing the market even higher, because there's going to be compression where they're still going to compare to the stuff I'm buying at 5. And then they're going to have a big enough portfolio here where they go, so it's 7 or 7.5, right? Because rates are now 8.5 or 9. Like, it's ridiculous. And the stuff that is coming to market now is stuff that it was like a flipper botched because they gutted it and ran out of money to finish. Like, and those are assets that no one can buy but somebody like me. And the returns on those deals are in the 20s, easily guaranteed, year after year after year. That those are 20% returns. After you get that project done, it's 20% returns for eternity, and or higher.
And you go back and get all, if not all, most of your capital back, so you can do it again.
Exactly. Yeah. That's the stuff where you're buying, where you're in position and you're kind of in that next stage, kind of the Dion stage, which is I had tons of cash saved up from a profitable running business. And now I can buy whatever I want, and I can buy something based on it giving me just a massive return after I do some value add stuff.
Yeah. So I'll ask you this question, Matt. Is there some number where you just go, I'll sell everything?
It's getting harder now to say no. Quads. I'm going back and forth on a deal right now. I bought 2 buildings next to each other. They're on separate lots. I bought it for $625,000. I put $250,000 into it. So I'm into it for $875 total. Okay. I got offered for one of them that wasn't updated. It was the other one that was updated. I got offered $8.25 for the one that was updated. That means I'm $50,000 into this other building that does $9,000 a month. It's kind of tough to keep on saying no to offers like that. So it's getting, and I look at it and say, you know, I've got thankfully 7-year 4% debt on that because it's commercial. I got 7-year 4% debt on that. I've still got 5.5 years of that left. So I have to look at it and say, hey, with rate and term, it might, you know, that might be an asset that makes sense to get rid of.
Yeah. Crazy.
Don't want to, but
yeah. What do you think of all this?
I don't think that there's a number for me. But it is fun to game theory, because I just like the freedom that comes from the cash flow.
Yeah.
I have a not quite similar story, but I bought a 4-plex, $590. I put a roof on it, so it was like 15, and I probably put 2,000 in repairs. So I'm 17,000 above 590.
Okay. 607.
1.5.
Oh.
Like it's almost, I want to say, tripled in value. It's in a ridiculous area. It was far undervalued when I bought it. It was a terrible seller. They had one photo. It was just the perfect storm. Their townhouse style. The cubes here that are over unders go for 1.2. So it's a ridiculous amount of money sitting there. But cash flow lets me do anything I want to do. I don't know that there's a number, because it already feels stupid numbers when it's almost like we kind of say you should own real estate and then add time.
Mm-hmm. So Dion, if that goes down $500,000,
my rent's
33%.
Exactly. Who cares?
It can drop back down to 590. It can go down 60%.
Who cares?
Yep. And I'm like, yep, my rents are sending me to go see Matt in like a week. And then I'm coming back and I'm heading to the Mediterranean for a 10-day cruise. And then I'm heading to Thailand for 3 months. And all that is happening because I don't sell a property for a ridiculous price.
There you go. Well, guys, how can people find you? We'll go to Dion first. Oh, he's coughing. Dion, where can people find you?
Right here on YouTube, Dion Talk Financial Freedom.
And Matt?
Lumberjack Landlord, YouTube, Instagram, 11:30 a.m. Eastern times on Sundays, and Dion's amazing live stream, 7 p.m. Eastern time on Tuesdays. Tonight, 4 p.m. Pacific, 7 p.m. Eastern. Don't miss out because he's going to melt your mind.
He always does. All right, guys. Thank you for being here. Thank you for being awesome. Thank you for listening to my rant that 8% is good, 5% is bad. Take care.
Thanks, Mike.